come up with a plan, rally a team around that plan, the nurses and the paraprofessionals and the pharmacists, all of those things, rallying that team together, bringing those resources to bear, and then iterating on that over and over and over. Could be every few hours in an ICU setting, could be every year or so, meeting with patients in, say, a outpatient internal medicine or family medicine practice. But that skill set of collecting data, analyzing it very quickly, collecting additional data, putting that together, coming up with a plan, coming up with a diagnosis and then a plan, and then rallying a team, that is basically entrepreneurship. That is basically real estate investing. You just do it around different problems. But it was such a natural transition for me to go from medicine to running a company and running the real estate portfolio, because I basically just carry out that same cognitive loop. I'm just solving different problems.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. What if your real estate investment could actually buy back your time instead of stealing more of it? Today's guest is a psychiatrist turned real estate mogul who manages over $400 million in assets and is changing the way doctors build wealth with no sponsor fees and no burnout. Elaine Stageberg, MD, MHA, is the co-founder of Black Swan Real Estate, a Mayo-Trained psychiatrist and mother of 5. She walked away from medicine after reaching financial freedom in her 30s. Today, she helps passive investors, especially physicians, build legacy wealth through radically aligned, vertically integrated real estate funds. I'm so excited for this conversation. I've been waiting for it. Let's get into it. Elaine, welcome to the show. Please tell me, what is it like in Minnesota right now?
It's the middle of June, and we are still, let's call it, in a prolonged spring, weather-wise, but getting that excitement with the kids getting out of school and, the schedule's loosening up a little bit for the summer.
So the prolonged kind of not summer happening, but still enjoying it, I'm sure, because I believe that you are doing what you want to do and what not something that you have to do. And I want to talk more about that. So you reached financial freedom in your 30s after training at Mayo Clinic and practicing psychiatry, right? Mm-hmm. What sparked your pivot from medicine to real estate?
Yeah, such a good question. It all kind of unfolded organically, and I'll tell you kind of the quick version, and then we can, dive into different parts as we go on with our time here together. Both my husband and I came from families with really considerable financial stress. My husband's mother had a traumatic brain injury, so she was never really fully employed throughout his childhood. His father was never around. My father was addicted to opioids and all of the struggle that came with that. So when my husband and I met each other, we knew we wanted something very different for our financial lives, but we didn't really know what. And so we went to people who were a generation ahead of us, be like our friends' parents, people we worked with. And we would ask them all sorts of questions like, how do you have a good marriage? How do you raise your children? What brings meaning in life? And one of those questions was, and how do you have financial stability? And time again, we heard real estate. And so we decided very early on in our marriage that we wanted to do some real estate investing. I owned my own home. He owned his own home. We moved into his home, kept my home as a rental, bought our first purposeful rental a couple of years later, and then just kept growing and growing and growing the portfolio. I'm sure we'll talk about that. And then throughout that time, I went to medical school, residency. My husband had a full career in technology that he really enjoyed. And then what really changed things from medicine to real estate was the pandemic. I think in a lot of ways, if it wasn't for COVID, I would probably still be practicing medicine. I always had this vision that my husband and I would have an office building and he would run the real estate portfolio like on the side, and I would have my psychiatry practice on one side. And so we would sort of work like in the same building, but we would have our own things. And as it turns out, we're in the same building doing the same thing. And during COVID, we had 3 children at that time. We have 5 now. And it just seemed like every day the kids were getting kicked out of school because of COVID exposures and other things. And so I said, you know what? We have a portfolio that provides us, meets our basic needs. Why don't I step back from medicine, let the vaccine come out, let schools stabilize, things settle down, and then I'll go back to medicine, in a year or so when things have stabilized. And during that year, we really grew the portfolio. We really doubled down on working with passive investors. And so by the time that year was up, it was just like a foregone conclusion that, of course, I would continue growing the company. So here we are.
So cool. And that mindset early on in your relationship or early on in your life, just to ask those who have already done what you want to do and who have become who you want to become, whether you knew it or not, it's such a great mindset. Now, what role did mindset play in the transition as well? I mean, that was a huge piece of it, but in your mind, like what had to change or what were the differences after asking those questions? And then where did you have to go?
As trite as it might seem, I would say mindset, is probably responsible for 80% of the success that I have today. I've always been very interested in human behavior change, right? I studied psychiatry for a reason because I was very interested in how humans think and how we make decisions and, again, behavior change. I really dove into what I would consider to be like the actual mindset world in 2019, like really thinking about the idea that we control our thoughts. Our thoughts are not just they're not like just implanted in our heads that, that they have control over us, that no, in fact, we have control over them. We can choose the way that we think about something. We can choose to tell ourselves very empowering stories, to see things through very empowering lenses. So for example, the story I just shared about the pandemic, I could have chosen to believe all sorts of very negative stories of COVID's ruining my life, it's ruining my children's lives. Why does childcare stereotypically get put on women, right? Like all sorts of very negative things. And instead I chose to say to myself, how can I make this pain mean something? How can I find meaning here? How can I problem solve? How can this be something that we look back on as a really good time in our lives? And that's when I made the decision to step away from medicine, which what I thought was temporary, that ended up being, that's still happening today in 2025. Today, I would say I spend probably about 10% of my time really focusing on my mindset. And by that, I mean journaling, meditating, working with a coach, working in group coaching programs, being a part of masterminds, like really focusing on how my mind is working, how my feelings are attuned, how I'm keeping my nervous system calm, how I'm creating the vision of the future that I want for myself today, spending many hours per week or per day on that so that when I'm doing the work, right? Running the company, building the portfolio, managing our employees, managing my family, my children, I'm doing so as the best version of myself.
That's amazing. And those masterminds too, I see a couple on your website as well, the blackswanteam.com, where you've spoken at these, I believe. You have your own, but also like PIMDCon, that's a huge one that you've been a guest speaker at. Mm-hmm. Limitless, that's Vikram, isn't it?
That is Ken McElroy and Taro Yaber.
Okay. So very cool. And that mindset is a huge piece. And it's almost, I don't think, I'm not a physician, so I'm only guessing on this particular piece, but it's almost the opposite of where your mindset is while you're a physician, while you're training, while you're doing these things, right? But how does your physician background also help you prepare to succeed in private equity and real estate? I mean, the mindset's different, but how did that background help you prepare?
Yeah, I do think the mindset is different. And I want to speak to that there's so many things that I love about our profession and so many things that I love about our training. And I'm going to speak to that too, and how I think that medical training is this really uniquely valuable skill set that can be applied to so many things. But I have seen, as I'm sure many people who are listening, who are in any, high pressure, right, highly educated profession, there's certainly a level of fixed mindset, a level of like hierarchy. And if you're more junior, you can't speak up, and a burnout culture and a hustle culture and those sorts of things. I remember late in my residency, thinking about my employment after residency, and you had to come in as like a it was called a special associate, and then work your way up. And I just remember having this feeling of like, when does this stop? Like, have I not proven myself already? Like, I did undergrad, I did graduate school, I did medical school, I did residency. Like, when can I just like be? And in medicine, you're just kind of always having to sort of prove yourself and kind of climb. So there is that mindset that's very different in the entrepreneurial world. One thing that I absolutely love about medicine is that I think that medical training is a phenomenal way to think. A physician takes a look at some medical records, maybe reviews things like pretty quickly, starts to get some ideas in their mind about, what's going on with that patient, what extra data they want to collect, either through interviewing them, talking to family, getting labs, imaging. Then they create a list of the differential diagnoses of what, all the different things that this could be. Then they figure out, okay, I believe, it's most likely to be this one, come up with a plan, rally a team around that plan, the nurses and the paraprofessionals and the pharmacists, all of those things, rallying that team together, bringing those resources to bear, and then iterating on that over and over and over. Could be every few hours in an ICU setting, could be every year or so, meeting with patients in, say, a outpatient internal medicine or family medicine practice. But that skill set of collecting data, analyzing it very quickly, collecting additional data, putting that together, coming up with a diagnosis and then a plan, and then rallying a team, that is basically entrepreneurship. That is basically real estate investing. You just do it around different problems. But it was such a natural transition for me to go from medicine to running a company and running the real estate portfolio, because I basically just carry out that same cognitive loop. I'm just solving different problems.
Yeah. And this transition into real estate, you've got your own investment group, Black Swan, right? And Black Swan is one of the only vertically integrated firms with no sponsor fees. Mm-hmm. First of all, what in the world is that? And why did you choose that model?
Yeah. So my husband and I built our own portfolio ourselves over many, many years. And then we started working with passive investors, smaller, doing like promissory note type things, then joint ventures. And then we wanted to make the leap into a private equity fund offering. But when we looked at how kind of traditional private equity is operated, it just felt so unaligned for us. In traditional private equity, there's lots of fees that the general partners will charge, like an acquisition fee and an asset management fee and a loan recourse fee, all sorts of fees. And then there's splits and those sorts of things. And there's so much opacity in the industry. And I think there's really a disalignment of incentives between general partners and limited partners. And again, kind of going back to thinking about human behavior, humans are motivated by rewards. That doesn't make us like bad or evil. That's just how we are wired in our nervous system. And so if a general partner is motivated by a fee structure that they can earn, it's very likely that they're going to make decisions that optimize their fees. And so we decided early on that when we scaled into private equity, that we would do it the same way that it had worked for our family, which was buying real estate, fixing it up, operating it very well. As you mentioned, we have our own property management company. We manage everything that we own, and then never selling. And not going into sort of what would be like the traditional private equity model is having a bunch of fees, a bunch of different splits, having like a 3 or a 5 year hold period and just kind of constantly churning that. And so it's really about alignment of incentives between our investors and ourselves, that we can only profit the same way our investors profit, which is from the actual success of the investments themselves, not from kind of a menu of fees on the side. And that's what made it feel really good for us, that when we were taking that leap into private equity, we were aligned with our investors. We're using the same financial models that built our own real estate portfolio and our own financial freedom over the last 14 years. And it's made it it's so different, and investors know that it's so different. And now I think we're, even having like a bigger impact on like the private equity industry as a whole, which is really interesting to see.
Yeah. And that's when you say radical alignment of incentives, that's what you mean, right?
Exactly.
You're pairing basically the GP with the LPs and making sure that those things align. And when you say private equity, to me, that's like the syndication itself, right? That's raising money from people you don't know, basically.
Exactly. Syndications and funds are private equity. Yep.
Yeah. Okay. Beautiful. And this is no small deal either, right? You're over 400 million in assets under management. So this is not like little things. Like, you've got the experience going on and handling this stuff. And for those fees, for some of the listeners who may not know, that acquisition side, if you look at these pro formas, I often call them fluff formas because sometimes we see these things. It's all make-believe, right? But sometimes you won't even see these fees, the acquisition fee, and closing and all these different fees that you see on top. And most of the time for an LP, you're just looking at the bottom. Hey, what's my return? But when you align these things, it does make complete sense to me. But also being on the other side of the table, acquiring these things. I mean, there's a lot that goes into acquiring the due diligence. I mean, I can be tens of thousands into due diligence, 100,000 into due diligence, getting these deals across the table. So I can understand the fee incentive as well because of what most people don't know. Like, okay, we're in paper, congratulations, but take that through due diligence to get bellied up to the table. That's a feat in itself, you know?
Yeah.
How do you design offerings like fixed returns with compounding and infinite ROI models? Who are they right for?
Yeah. So the offering that we have right now is called our Secure Freedom Fund. And it really came out of listening to our investors over the last several years. So I still do almost all of our investor calls, which will often surprise people, right? For a firm of our size, people think we have like a call center and other things. Nope. I just have my calendar available on the internet and people can block a time on my calendar and speak with me. I actually just finished one right before we came on to our time here together. So hearing from investors over the last several years, right? There's been a lot of uncertainty in the market around interest rates, what's going on with the Fed. The story of 2024 was who would be elected. Now we know who was elected, but this administration, there's a lot of like once in a lifetime things happening with tariffs and immigration policy and, government cuts, like you name it. So there's just a lot of uncertainty out there right now. And investors still want to be exposed to real estate. They know the tax advantages. They love the diversification. They love that it sticks in bricks and dirt. It's something real and tangible, but maybe feeling a little skittish on variable rate of return offerings right now. So we created the Secure Freedom Fund, which pays a 10% fixed rate of return. Investors can elect to receive monthly distributions if they're looking for a cash flow option, or they can allow their distributions to compound. And if they choose that option, then they compound monthly, which really accelerates the overall rate of return. After just 12 months, it's 10.47%. After 24 months, it's 11.57%, and then on and on. And investors really seem to like it. People have been very happy with the Secure Freedom Fund.
And this is a fund separate from a syndication because you're basically, as a fund manager, you're picking and choosing where to go in those funds, where to disperse those funds to, which investments, correct?
Correct. Yeah. So the definition of a fund is the money goes into the bucket and then the bucket is spent on many, many, many properties, as opposed to a syndication. The money goes into the bucket and then that bucket of money is used to acquire one asset. That's the difference between a syndication and a fund.
Is there a time restriction on those types of investments? Do you have to do it for 12 months, 5 years, or can I be in and out kind of like the stock market?
There is no time restriction. Investors request a redemption whenever they would like, and we process those on a first come, first serve basis. If investors redeem within the first year, they do surrender any preferred rate of return, kind of similar to like cashing out a CD at a bank early. But after that first year, it's just kind of business as usual. What I tell investors when I'm speaking with them is I don't want them to think of this as, say, like a high yield savings account, like it's, an ultra liquid part of their own personal balance sheet, because we are using those dollars to, place the down payment and the renovation budget for real estate, which is by definition a relatively illiquid investment. But the way we've structured it is there is that liquidity option that they can request a redemption whenever they'd like. And then particularly after that first year, that's just business as usual.
Yep. So we're talking about LP, GP, and it comes down to operations. It comes down to investing time into these things, right? Many doctors feel like they have to be operator in order to succeed in real estate. What's the biggest myth around passive investing that you would like to dispel?
I think things are very different in 2025 than in, say, 2017, 2018, 2019. Things were easier in, I would say 2015 through, say, 2021, right? We were well past the 2008 crash, well past that early recovery. For people that don't know, right, real estate has prior to say like 2023, real estate went through the largest expansion in history, the longest term upswing in real estate. So things looked really rosy for a number of years. And I think a lot of people thought it was easy, right? Like everyone else is making hay while the sun shines, so I will too. And I think what I've seen over the last several years is people have realized that real estate is a job. There's no, if you own real estate, even if you have a property manager, you are still involved. You are still calling the shots for bigger maintenance expenses, capital expenditures. If there's an insurance claim, there's still some level of liability, right? You're having to secure the debt, all of those sorts of things. People really got into short-term rentals because of the tax advantages from that. And I think now they're figuring out that they're kind of like Tamagotchis, like they constantly need your attention. And those of us that grew up in the 90s, right, a Tamagotchi was fun for a little while. And then after a while, you're like, I just want to put this thing down. But it's hard if you own a short-term rental to pass that off to a property manager. And then a lot of people are finding that if they sell, right, they have that depreciation recapture. So I think what I have seen, and I think I predicted it because I've been in real estate for so long, I knew it was a job, is what I would sort of encourage people is, do you want to do real estate because of the thrill of the chase, the love of the game? You're an entrepreneur at heart. You want something to take care of. You want something to get your hands dirty. If so, go do active real estate and enjoy it. If you want to do real estate for the financial and the tax benefits, have someone else do that work, because chances are what you want when you have this additional income is to be able to maybe cut back at work, buy back some of your time, buy back some of your freedom, and not supplement that with a part-time job, which is what real estate investing is. And I think I've seen that sort of shift over the last couple of years, that people who have done active real estate are kind of like, okay, I came, I saw, I conquered. I don't want to do this anymore. This is a lot more work than I anticipated. When I do free up my time, say cutting back at work or whatever, I want to spend it with my kids, on my hobbies, taking care of my health, not taking care of a rental property. And those people that have always done passive investing, I think they sort of know they've made the right choice because they've been able to benefit financially from real estate investing without having to do all the tinkering. I love real estate. I love for the love of the game, but I'm also doing it full time, right? Very different than trying to squeeze it in, around a clinical schedule.
Mm-hmm. So I think I grew up in the 90s. I had no idea what a Tamagotchi is. I had to look it up. So
oh my gosh.
It's like a little game, right? A keychain game. Is that what that is?
Yeah, it's like a little keychain. It was like the size of, I don't know, like an egg. And it would be a little animal. And, it was just like a little analog screen, right? So just little black dots, right? And it would be a little animal and you would have to feed it and water it and put it out to nap and exercise it. And it would beep at random intervals. And then you'd have to get it out, pull it out of your pocket or wherever you carried on your backpack or whatever, and then press the little buttons and feed it or whatever. And they're really cool at first because you're like, oh, I wonder when it's going to go off. And I wonder, is it going to need exercise or food, or is it going to have a little reward for me, right? It like feeds into that reward system in our psychology. But then after like a week or so, you're like, I don't want the Tamagotchi. I don't want the toy that demands of me. I want to play with my toys when I want to play with my toys. And when I'm not playing with them, I don't want them beeping and screeching at me. I think real estate is a lot like a Tamagotchi, particularly short-term rentals.
Mm-hmm, mm-hmm. Very interesting. Tamagotchi.
Yeah.
Now I know what this is.
Yeah. I think, I'm seeing like all the things from my own childhood coming back, right? Hello Kitty, other things like, I think Tamagotchis will probably come back in the next couple of years. Like the cycle is ready for it.
So how do you guide investors from stock-heavy portfolios into tangible real estate exposure?
It's a little bit of a different journey for every investor, right? Depending on their age, their risk profile, what they know about real estate, all sorts of things. I think when I think about real estate, I think about how more millionaires are made from real estate than any other industry. Real estate is exactly that. It's real. It's dirt and sticks and bricks and wiring and plumbing. It's actual real value. It's something that's needed, right? Things are changing very quickly, and not just AI, but even when we're looking back over the last 25, 50 years, life is so different, and the pace of change is faster than it ever has been before in human history. but we still need a place to live. We still need a place to lay our head. We still need a place to work, a place to shop, a place to recreate. So it's something that's a basic fundamental human need. There's a ton of tax advantages in real estate. The government wants to subsidize the creation and the maintenance of high quality housing. And they do so by giving tax advantages to people who buy and manage and own real estate. And not just through real estate professional status, which some people are aware of, but even with passive investing. There's things like depreciation and other things where it's much more tax efficient than earned income on a W-2. So I think when people look at the whole picture of real estate, it's a really compelling part of anyone's portfolio. And then from there, it's deciding what type of real estate. Am I looking for something that's more, like a long-term wealth play? Am I looking for something that has a cash flow option? What's my risk tolerance? Those sorts of things. But I would hope that anyone listening really considers putting at least a portion of your wealth into real estate, because there's so many valuable aspects of real estate investing.
Building that roadmap, understanding where you want to go is really important. And it's difficult too, because we don't know, especially if we're first starting, or I never want to know everything, right? I don't ever want to be that person at the table that knows everything. Mm-hmm. But can you walk us through your visioning process and how it applies to real estate goals? How do we get there?
This is my favorite thing to talk about. When I think about everyone has a zone of genius. This is mine. I absolutely love it. I think it brings together my skill set as a psychiatrist, an entrepreneur, an investor, a parent, just kind of all of these really important things in my life. And in a nutshell, I could talk about this for hours, but I'm going to try to make this tight.
Episode number 2. Yeah. Tamagotchi.
What separates humans from all other animals is that we can think about the future. Yes, we have instinct. Yes, we have imprinted behavior, but we have so much more than that. We can use our brains. We can use our frontal lobes. We can use our visual systems to think about and see the future before it has happened. We can do that for 5 minutes from now, right? Think about what we're going to do next, right? Even when we think about, I'd like to stand up and go get a glass of water, we see that unfolding in our head before we actually stand up. We can think about it for years from now. And there's something in our nervous system that doesn't quite understand the difference between reality and what's in our imagination. Athletes have been using this for decades, where they will visualize themselves, winning the gold medal or shooting the free throw, or, whatever it is for their particular sport. And they'll spend a portion of their time doing the actual physical sport. And then they'll spend a portion of their time working with a visualization coach, seeing themselves going through the motions of their sport. Yeah. So the time period that I have found to be a real sweet spot for people is to see what you really want in your life in about a 3-year time frame. Longer than that, and it starts to become very abstract. Like, well, what's going to be happening? Where am I going to be living? What's the technology going to be? It just becomes like a little abstract for people. Shorter than that, and our mind will start to say, well, that's not possible. I can't get that done in a year. That 3-4 year time frame is short enough that it feels very tangible, very knowable. But it's long enough that our mind is a little softer to say, I don't know, maybe I could make that happen, right? 3 years is a long time. And really seeing oneself. There's no magic formula to visualization. You just create the time frame. So if you say, I want to see myself in June of 2028, and really try to create the visual image of it. Some people see a movie. Some people see a picture. Some people see just quick snapshots or images. Some people don't see anything. They just feel a feeling, and that is okay too. I've learned that from guiding enough people through visualization, is they'll say I'm not seeing anything, Elaine, am I messing up? No, you're still creating it somewhere in your nervous system, even if you're not creating it in your visual cortex. But really see, what do you feel like when you wake up in the morning? How are you spending your day? How are you working? How are you earning income? Who's in your life? What do those relationships feel like? What are you doing in your free time? What's your health look like? Just kind of go through all of the different domains and really see it. See yourself embodied in that. See yourself showing up to whatever work it is that you want to do, being in relationship with the people that you want to be in relationship with. Maybe there's a spouse in the future or a child in the future, you name it, really see that, really create it. And then this magical thing happens that people who have done it believe it. And they're like, yep, it happens every single time. I know it. This is why I spend so much time visualizing. People who haven't yet experienced it are a little more skeptical. But I'm going to offer it to you and hope that people receive it, is that once you do that, what people find time and time again is the thing that they thought was maybe 3-4 years out can happen in 6 or 12 months. Some of it can happen in 3 months because our nervous system has become very attuned to it. And that's that part of us that's uniquely human, that when we're attuned to what we want in the future, we start to take action both consciously and unconsciously to create that future into reality today. Most of what I spend my time on these days outside of real estate is teaching people about visualization because I love it. And I think it just unlocks so much human potential.
Mm-hmm. Yeah, agreed. And I just, in my mind, there are, 10, 12 books come into my mind where I've read the same things and I've, taken the same action. I absolutely love it too. And even down into the taste, the feel, the smell, the sounds in those visualizations, yes, manifesting that. And then our brain, I don't know if it's the reticular activating system, whatever it is, goes out and grabs that to make it true. Mm-hmm. Because whether it's real or not, the brain doesn't know, but it wants it to be real. It wants us to be right. So finding ways to do that. So be careful what you tell yourself over and over and over again, the thoughts that we have in our head. But this is how we get that path, right? That roadmap. And in there, whether you want it to be multifamilies or whatever, it may be your time, that'll give you that roadmap to where you want to be, who you want to become to get there. Now, how can a physician overwhelmed by options create that clear investing roadmap?
Spending some time thinking about it, right, is a big one, which sounds like, oh no, that's too easy. But truly, right, that's when we start to first create everything that not only we have as individuals, but everything that all of humanity has was first an idea in someone's head, right? Someone had to dream of the idea of a cell phone. Someone had to dream of the idea of a Zoom call. Someone, on and on and on. So everything we have, everything that you can see and touch and feel in your lived reality was first an idea in someone's head. And the same is true for your own reality. So think about what you want in the future. What do you want in terms of your monthly or annual income? What do you want your tax bill to look like? What do you want to be on your balance sheet? What do you want your net worth to be? What values and beliefs do you want to have about money? What stories do you want to have about money? What do you want to teach your children or the people who are important to you about money? And then just work your way backwards from there, but really see it in the future. If you want, a certain net worth with a certain amount of cash flow, with a certain tax amount in 3 years, then ask yourself, okay, what do I need to do in 2 years to make that happen? What do I need to do in 1 year? What do I need to be doing in 6 months? What decisions do I need to be making right now? Is it listening to a podcast like this and learning something? Is it researching about something more, meeting with a CPA, meeting with a attorney to do estate planning, looking at various real estate options, deciding if you're going to do active or passive, right? And then your brain, exactly like you said, your brain starts to say, well, maybe this is the next step. Well, maybe this is the next step. And then there's just this magical thing, for lack of a better word, that starts to unfold, that when you're in the arena and you're moving forward toward your vision, you'll start to meet people, or you'll learn an idea that you've never heard of before, or you'll be able to put 2 ideas together. You'll find the resources, you'll find the people that you need, the questions that you need to have answered, and you just keep moving forward. And then before you know it, the thing that you created in your vision is real.
Yeah. Imagination becomes reality. Mm-hmm. And in that regard too, talking about the future, where do you see the greatest opportunities in the next 12 to 24 months for cash flow and equity growth?
Right now is a really interesting time in real estate. So I remember years where, we would beg brokers to take our calls. There's one big broker in Minnesota who represents a lot of sellers, and I named one of my children a name that's similar to his. And I tried to get his attention by oh, I want you to meet my baby. We were trying everything. I actually did.
That's huge right there. Holy cow, Elaine. That's to the wall right there. That's
I
awesome.
did get a tour of a very important acquisition in Minneapolis, St. Paul, as a result of that. But it
Nice.
was just a very different relationship, right? Like they were
Mhm.
clearly, the ones who held the power, and as buyers, we were clearly the ones who were, seeking a scarce resource. And things have really shifted. I can pull up my email right now. I can pull up my husband's email, and I would estimate probably 50% of our emails are brokers following up on deals that they've presented to us, asking if we're willing to make an offer, telling us that there's something new that we would like to consider. There's a number of sellers who acquired in, say, 2019, 2020, 2021. They had, say, 3 or 5 year debt. They've gone through interest rate escalations. If they didn't have fixed rate debt, maybe they've been able to hold on. Maybe they did some rescue capital or something to hold on, but now they're at a time when their debt is ready to renew and they're just simply not able to renew. And so they need to sell so that they can either return some capital to their investors or take a loss, but at least be done with the deal. And there's very few buyers. There's very few buyers that have done well by their investors over the last many years so that their investors are confident in them and are continuing to invest their dollars, that have the operational capacity, that have the emotional fortitude, right? Because if you've been running negative cash flow for the last several years because your mortgage payments have gone up as interest rates have gone up, it can be very nerve-wracking to think about acquiring something new. But we've had all fixed rate debt in our portfolio. We made the decision all through COVID and when those interest rates were at historic lows to get all fixed rate debt. So we've weathered this interest rate storm with no bumps and bruises. We're vertically integrated, so we're taking care of that operations piece. Our investors trust us, so we're able to raise capital. So really for us right now, the balance for us is growing the portfolio, taking advantage of this unique buying opportunity where right now the buyer has a lot of the power. We can call the shots on price and terms and closing date and those sorts of things. And for us, for Nick and I, the thing that we talk about is not growing so quickly that we sacrifice our operations. Like we just want to go out and buy up everything, right? Because we're entrepreneurs and that's what's fun.
Mhm.
But growing at the right rate so that we can preserve our operations and make sure that our quality stays the same while taking advantage of this really unique buying opportunity.
Yeah, absolutely. And your likeliness to close, your experience, that speaks volumes to these brokers who are looking to get a deal closed too. So especially if you closed deals before. And you mentioned fixed rate. So you're still on a shorter term, right? You're still 5 to 10 years on these notes, but it's fixed rate through those years, correct?
Correct. Yep.
And I see here on your website a little note that says you've never lost investor capital and never failed to hit a target return.
Correct.
Huge.
Yeah.
That's huge.
Correct.
Huge. Awesome. Well, congratulations on that as well.
Thank you.
Hey, what trends are most exciting to you from operations to structure to strategy?
So much there. I believe in real estate operations are everything. Kind of put simply, someone can buy like the most amazing deal at an impeccable price with amazing financing, like everything's lined up perfectly. And if the operations are ho-hum, the value can be lost in that deal very quickly, right? Like could be as little as like 6 or 12 months. We just acquired a community. It's 100 units plus 100 storage units all on one parcel for $4 million. It's the lowest per.
Wow.
Wow is right. It's
what?
I know.
What is it? Are they even livable? I mean, that's insane price.
Many of them, I would say, are maybe right on the verge of livable. It's the lowest per unit price in Minnesota since the 2008 crash. And the story of that community is a developer built it, took really good care of it through his lifespan. He managed it himself. He passed away about 7 or 8 years ago. His brother managed it for several years, did like an okay job, but not as good as him, right? It wasn't the brother's baby the way it was, the developer's baby. Then I'm not sure if brother passed away or why he left the picture, but he stopped managing it. Then sister is managing it. She's in her 80s, has never done real estate management before.
Oh, wow. Does she have an email?
I'm not sure. And in about a 4 or 5 year period, essentially completely ruined this community, for lack of a better word. Easily that community should have sold for 12 million, 13 million, like really should have been, a generationally changing, wealth creation opportunity in their family, and probably would have been had the original developer and manager sold it at the end of his life instead of passing it on to people who didn't take care of it. That is the story of operations. Conversely, someone can buy something and maybe pay a little too much and maybe have debt that like isn't the best and all sorts of things. But if it's managed very well and it's really cared for, the property just gets better over time. Maybe there's a big push in the beginning with renovations. And then if it's just managed well over a number of years, a lot of that deferred maintenance gets taken care of. Good solid CapEx in terms of like roof and windows and water heaters that lower the future maintenance bills, the future utility costs. And that investment can do really, really well. And it's all about operations. And operations is the hard part for investors and entrepreneurs because it's not that sexy dopamine of an acquisition, right? Of something new, something cool, something shiny. Operations is the back-breaking day-to-day work. It's no fun. It's often like a series of problems. Someone's always upset, right? Like all those things. But that's where the real value comes from in real estate investing, in any business. The real value comes from operations. Operations, and the shiny object syndrome pulls us from that. My wife constantly reminds me, it's like I'm keeping ahead of the bus trying with these acquisitions, and my wife is constantly reminding me, hey, bring it back in. This is when we get in trouble, when we do too much, we have too many things going on. So focusing on Health-wise, she and I would get along very well.
Yes, very much. Very much. So we've got 26 units we're closing on here at the end of the month. And it's like, okay, it's game time. We got 18 months, interest-only payments.
Yes.
It's game time to run that business plan, focus on operations. Maybe the first time I've ever got chills talking about operations.
I like to say operations are everything.
Yes. Awesome. Hey, quick fire close. Are you ready? Let's have some fun.
Let's do it.
Really fast. We've got 3 questions here. Just really quick response. Ready? One thing you believe about real estate most people don't.
Oh, I guess I would say operations are everything. I know we just covered that, and so that's probably why it's top of mind. But I think that's what I would have said, even if we hadn't had that.
How about operations are sexy?
Yeah, there you go.
Most meaningful investment you've ever made?
Getting married to my husband.
Oh, that's awesome. That's awesome. Legacy in one word.
My children.
Awesome. My when I read that earlier, I was like family instantly. So that's awesome. Mm-hmm. Elaine, thank you so much. We've burned up 40 minutes here and we could go for hours and hours and hours. I was actually thinking about splitting it, but we did it. Congratulations to us. Now we can go play with our Tamagotchi.
There we go.
Yes. Awesome. Well, thank you so much for your time.
I appreciate it.
Where can the listeners find more out about you and your fund?
Our website is blackswanteam.com, and from there you can learn all about our portfolio, our track record. If someone is interested in investing with us, you can find out about that at securefreedomfund.com. Can see all the paperwork, the deal deck, our most recent live presentation, put your name on the wait list. Kind of everything is right there at securefreedomfund.com. And then you can look for us on things like YouTube, Facebook, Instagram. Just look for Black Swan Real Estate, and you'll find us on all of those channels as well.
It's awesome. Black Swan, is that similar to, the first time I've heard Black Swan was in the book Never Split the Difference?
Yes. Yes. And in fact, I got to meet him one time at a conference.
Chris Voss?
Chris Voss, yeah, FBI negotiator, super stoic, super calm guy. But we have all this Black Swan swag. We have like coffee mugs and towels and a stuffed black swan. And I worked with the conference organizers and I'm like, hey, I know you all get, requests to meet all the, high profile speakers all the time. If I could just have like 30 seconds, I really want to give Chris this stuffed black swan. I know he has some children and some grandchildren and they obliged me that. And he cracked a smile and we got it on camera. And it was definitely like a full circle moment for me.
That's awesome. Well, congrats on that. Congrats on your journey to keep it going, build that legacy. I know the children are young from the dates that we were talking about here. So keep that focus on them. I know you're a great mother, just like you're a great real estate investor, a great wife because of the answer you just said a little bit ago. But thank you so much. Keep it up. Congratulations to you.
Thank you.
Whether you're ready to leave medicine or just want to stop trading time for money, Elaine's story proves you don't have to pick between purpose and profit. Real estate can be a tool to reclaim both. Please reach out to Elaine and the Black Swan team. You can find them at securefreedomfund.com, securefreedomfund.com, and also at blackswanteam.com. I'll have both of those in the show description. What an amazing conversation. So much information. And wow, just a great person. Another great guest here on the Real Estate Mogul MD. Thank you for your time. Thank you for your attention.
This episode is powered by Crescent Tech. If you are looking for a CRM built for real estate investors, discover Streamline REI by Crescent Tech. Simplify, automate, close faster.